there is something interesting happening at the Nairobi Securities Exchange, which I want to discuss with you. A number of companies have increased their dividends, okay? Whether it is the interim dividend or the final dividend, you name it, despite their earnings and profits declining. I'm saying so because in the course of this month, a number of companies released their first half of this year financials, okay? And exactly 9 companies listed at the NSE did see their profit decline in that particular period. Despite that, these 9 companies did increase their dividends. For example, Absa Bank did increase its dividend by 150% despite its profit declining by almost 10%. BOC increased its dividend by 60% despite its profits declining by almost 40%. Stanchart increased their dividend by 6.3% despite their profit declining by almost 17%. Centum did increase their dividend by 250% despite the profit declining by almost 9%. Why is that the case? You could be sitting there thinking, in case profits decline, then the company will also reduce its dividends. But then again, we are seeing some interesting nuances across these companies. Is what I want to talk to you about. I'm going to share 7 points to assist you understand why that is the case. And of course, as you can see, today I'm on the road traveling. I'm going to travel to support some investors out there, and that is why I'm recording this video before I hit the road to go out there to have those meetings. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click that button for you to subscribe to my channel, and I'll still add it. Drop a like on this video. And also guys, a number of you have reached out asking if I can support you on one-to-one consultation as you go about investing in Kenyan stocks and also other asset classes. Of course, I can support you. I have attached my WhatsApp number down below. Look down here in the description. You can see my WhatsApp number. Reach out to me on WhatsApp. Let's have a brief call. I understand your investment journey, and then I can be able to support you for you to be able to make more informed financial decisions. And with that, the very first point I need to understand is that dividend decisions are not solely based on a specific financial period profits. And I'm saying so because dynamics across companies vary, okay? And typically, dividend decisions are made by the board of directors. Of course, it is at the discretion of the company. Dividends are not a guarantee to shareholders. The board of directors can decide, for example, this year we made amazing returns, therefore we want to share with shareholders. And there are many things which inform that. Case in point, the company's cash flows, okay? Case in point, retained earnings, capital requirements, future expectations. Simply put, profits are not the only things which the company and board looks at when they are deciding whether to pay dividends or not. Because profits might decline, right? But then again, the company is doing amazing on cash flows. And also, future expectations around investment have maybe declined. Therefore, the company might decide to share a good chunk of their profit with shareholders, thus seeing dividends increase despite profit declining, okay? And then the second reason as to why this could be the case, where dividends increase and yet profit has declined, is because profit decline might be temporal. What do I mean? Out here, businesses operate in very interesting settings, and specifically in 2 areas. For example, in banking sector and also cyclical businesses. Those businesses whose profits vary depending on seasons, you name it, right? They might experience a temporal decline in profit. It doesn't mean that is the going concern of the business when it comes to profitability. And therefore, if the company management and the board of directors know very well that that particular decline is temporal, they might actually pay dividends to shareholders or even increase the dividends to shareholders, knowing very well that particular decline is temporal and is not bound to affect the business over an entire 1 year period or even for a long period of time. Okay? And then the third reason as to why this is the case is because the company may simply have fewer places to invest money, right? And this is especially the case when we deal with mature companies, right? Even if their profit decline, the company might have fewer places to invest the money. And therefore, the board of directors might decide, given we have fewer places to invest the money, why not share a substantial portion of our profit or earnings with shareholders? And therefore, you could have a scenario where, yes, profit has declined in percentage, but then again, the company could even share a huge portion of the money they have made with shareholders, therefore seeing dividends increase despite profit declining. And this is especially true for those mature companies. And also, we've seen that particular case, for example, in the Kenyan market through the NSE. And then the fourth reason as to why this is the case, it might be because management wants to keep shareholders happy. Yes, guys, one of the role of management of a company is to grow shareholders' wealth, okay? Of course, one of the straightforward ways which company management demonstrates that they are growing shareholders' wealth is through sharing cash they are making with shareholders. This so because they might be wanting to boost shareholders' confidence, okay? They might be keen on not disappointing shareholders, okay? They might be keen when it comes to reducing dissatisfaction in case shareholders are dissatisfied. Simply put, the company could be very keen to ensure that they want to make their shareholders happy. And therefore, even if their earnings decrease, they might end up maintaining or even increasing the dividends they are paying to shareholders to ensure that their shareholders remain happy, okay? And then the fifth reason as to why this is the case, it could be because the company has strengthened its balance sheet. You know, guys, when it comes to matters finances, okay, and also financial reports, we have different reports out there. For example, statement of profit and loss, also called income statement. We have the statement of financial position or balance sheet. We have cash flow statement, you name it. So under the income statement or statement of profit and loss, it might show that the company's earnings have declined or the profit has declined, yes? And yet, under the balance sheet, the company could have strengthened its balance sheet. For example, the company might have cleared a good portion of its debts, right? And therefore, through the company clearing a good portion of its debts, is going to mean that in the present time and also in future, the company might be able to unlock spare cash for it to share with shareholders. Case in point, at the NSE, we saw, for example, a company like Centum undergo very insane restructuring, even spinning off some of its subsidiaries, like, for example, the Nabo Capital, you name it, in the course of this year. And that restructuring assisted Centum be able to clear the debt which it had in its parent company from around 2020 to 2021, which was there for about 5 years. It was able to clear a particular debt, and despite the earnings of the company declining, Centum ended up paying 2.5 times dividends to shareholders, right? That is a signaling that yes, the company might have seen its income decrease, but then again, its balance sheet grew stronger. That is an example where a company might pay dividends because its balance sheet has grown stronger despite its profit declining, okay? And then the sixth reason as to why this could be the case is because large shareholders, especially multinational parent companies, typically want cash. And as we know very well, at the NSE, we have companies which are multinationals. Think about BAT, think about Standard Bank, and even other companies within NSE, okay? Those companies also have parent companies, right? And parent companies also have substantial holding in the stocks of these companies, right? Therefore, the parent companies want cash. And that is why these companies typically also share a portion of their earnings with shareholders, knowing very well the parent companies are holding substantial amount of ownership in the local entities. And therefore, through this declaration of dividends and paying the dividends, also they are ensuring that the parent companies are also enjoying cash from their returns. And then the last reason as to why, and I think is more of a consideration for you as an investor when you see this happening in the market, is that just because a company is constantly paying dividends and even so increasing its dividend, it doesn't automatically mean the business is a good business. That is why you, as a shareholder, constantly ensure you do analysis, you do your own research instead of just jumping on buying a given stock because a company is paying dividends. Analysis of a stock entails many things. Dividends and dividend yield is only one of the things which you need to be looking out for. But the scope of analysis needs to entail many things so that you ensure whatever you are jumping on fits your investment profile, and even so it serves your purpose. Just because a company is paying dividend, it doesn't automatically mean the company is a good investment. Guys, what do you think about this video? What do you think about the pointers I've shared with you? Do these pointers make sense and they have helped you understand why some companies out there maintain or even increase their dividends despite them having a decline in profits? Comment down below. Let's continue discussing. Cheers, guys, and you all stay safe.